All right, guys, and let's talk briefly about the national real estate market and what we're seeing going on there. So, according to this article in Forbes Advisor, why the housing market is likely going to remain hot, they argue a few reasons why they believe the market's going to remain hot, and I believe with quite a few of these, starting with millennial demand. So, we've got a young generation coming of age to buy their first house, and we've got older folks who are now at that age where they're empty nesters, they want to downsize, they want to sell their larger house, get a smaller house. So we've got this clash of a younger generation and an older generation all vying for the same competitive property. So that was one reason we're seeing such an increased amount of housing demand. Number two, supply. We just simply don't have enough supply. It's a classic economics problem, supply and demand. We have too little supply, too much demand. And so that is causing spike in prices. And so that's going to continue to be a factor in why the housing market remains strong. So loans are really strong right now. There's less of a likelihood that people are going to default on their loans than there was prior to 2008. The book of loan business that has been produced over the last decade is it's in a league of its own. It's very unlikely that people are going to default on their mortgages like they did in the 2008 crisis, because ever since that time, lending has had strict guidelines produced, and there's been the CFPB came about to enforce new guidelines to make sure that there was less and less predatory lending, tighter and tighter stringent criteria for lending. And even right now, as we're seeing interest rates rise, that is having an effect on how strict the guidelines are on lending as well. So very unlikely that we're going to see a default on a lot of mortgages. Very unlikely we're going to see a high amount of short sales or foreclosures like we did back then. So let's talk a little bit about existing home sales. You can see that existing home sales have retracted in April. So there could be a number of reasons for this. Number one, you've got buyers who are getting priced out of the market as interest rates rise. People are saying to themselves, I can't afford this monthly payment anymore. It's just getting too high. And then you've got sellers who are on the sidelines because maybe they want to sell their house, but they're saying to themselves, why would I want to sell my house when I have a 2.5% interest rate on an existing home so that I can go to market, find a new house, and pay roughly 3% higher on a new house? That's going to significantly impact an existing seller's home monthly payment. So it may not be worth selling your house to get a new one if your monthly payment, all things the same, is going to be much higher just because of the interest rate. So that could be weighing on why home sales are retracting as well. We see existing homes fell to 5.61 million for the seasonally adjusted annual rate. Sales were down 2.4% from the prior month and 5.9% down from a year ago. The median existing home sale price increased at a slower year-over-year pace of 14.8% to 391,200. If you look at this chart from the National Association of Realtors, you can see since 2019 here, existing home sales, we had a much larger supply. We had closer to a balanced market just a few years ago, 3.9 months of inventory. And then it started to slowly go down. In 2020, 2021, you can see that we fell significantly into a very hot seller's market where we were below 2 months of inventory. And again, as I mentioned in the past, the months of inventory, when you have less than 4 months of inventory, that means you're in a hot seller's market. So you can see that we're in an extremely hot seller's market because the inventory has been even below 2 months at times. Here in the Austin area, just to bring this up before you, in Austin right now, you're seeing the months of inventory are 0.7 months. So an extremely hot seller's market in the Austin area where I'm at, and the median price here being 642,500. So back over to retail sales from Fannie Mae, we see that there was a decline of 2.4% in April to the seasonally adjusted annualized rate of 5.6 million home sales. That's the third consecutive monthly decline, as we already discussed. Housing starts declined 0.2% in April to 1.7 million. National Association of Home Builders, they're saying that the market index dropped 8 points to 69 in May. That's the largest single monthly drop since November 2018. So moving over to the mortgage applications, because I've got just a few more seconds, I want to touch on the current mortgage rates. We're seeing right now mortgage interest rates are at 5.35% for a 30-year fixed rate loan, 4.78 for a 15-year fixed. If you're going to do an ARM, a 5/1 ARM, that's 4.52. So those are today's mortgage rates. A little bit about the market right now. Comment below if you have any questions. Reach out to me if you have any questions. Thanks for watching this video. I'll see you in the next one.